Good afternoon. This is Ken Long from Tortoise Capital with a review of the weekly strategy report for September 1, 2012. We're in a market that is still bullish quiet. On an annual basis, using weekly RSI 14, it's at 62 out of 100, coded neutral. On the 10-day NDX, we're at 33 out of 100, also neutral. Percent stretch above the 200-day moving average at 5.92% is white bullish. Slope of the 50-day moving average has pulled back a little bit to 0.50 positive. That's white bullish. ADX has declined to 19.3. That's neutral in terms of strength of trend. ATR percentage is at 0.75%, so extremely quiet. So, bull quiet market, neutral on a short-term basis. We're rebalancing this week. The 26 ETF portfolio goes to DBA Agriculture, EWA Australia, EPP Asia less Japan. So for the first time in a long time, we're outside of the U.S. 13 ETF portfolio has Australia, Asia less Japan, and U.S. technology. Next reevaluation on or about 1 October. In ETF 2, the theoretical exposure of the model is at 90%. The model portfolio itself will be at 100% exposed. And the trailing stops get adjusted. Excuse me. Taking a quick look at the blended monthly rebalancing portfolios. In the 13 ETF, again, you see everything is on a buy signal except for Japan, which is a cash. Been a pullback, a recovery really, in treasuries from 121 to 127. Which make them attractive once more. That was a good buy on dip opportunity. And you can see the top three, Australia, Asia less Japan, and technology. In the 26 portfolio, it's the same basic lineup with the addition of agriculture, emerging market bonds, U.S. real estate still high. You can see how far down now that SPY, the small caps, IWM, and the mid caps, MDY, have been. Gold is continuing its little stealth move up. It's not really that stealthy anymore. The only things that are on a cash signal, Japan, China, and the BRIC countries. Looking at the market health check, the vertical blue lines are 10, 20, and 30 days of look-back period. The horizontal purple line is the swing high at 143. The various red horizontal lines are support levels that have held in the past. We're locked into this very tight sideways developing pattern here between 140 and 143. You can see for a while we had left the river and we're staying north of the 10-period moving average, but now price and the 10-period moving average have rolled back into the river. You can see by the regression channel we got a very nice tight move here, but we're now at the bottom of the regression channel, testing support levels here at the midpoint of the river. And in my view, this is Fisher cut bait time. If we see a violation of 140, I think it gets to 138 pretty quickly. And then if support at the 50-day moving average in the bottom of the river doesn't hold, then it's down to 135. Then we're into bullish correction, and then the 200-day moving average at 133. So Fisher cut bait time. It's got to give out of this channel. If it goes north of 143, that'll be very good. I think could be a reflection of the Fed willing to print money. And that, I think, is why commodities are starting to go up. So Fisher cut bait time. The regional report from ETF2, 9 out of the 10 are on a buy signal based on the moving average filter. That's why the model, theoretical models at 90% invested, 10% cash. Strength in the U.S. tech. Weakness still overseas, although you can see Asia less Japan and Europe have come back pretty well. Inside the U.S., it's tech, then large caps, then small caps, then mids. World market model. All of the U.S. except for mid-cap growth are above average once more. Strength in Asia, less Japan. Australia and Singapore are the leaders there. Laggards in China. Latin America and emerging markets are still weak. Brazil very weak. Mexico strong on the basis of oil. A number of emerging countries in Europe showing some strength, some emerging strength there. The defensive sectors, both U.S. and globally, have given back now, the staples, utilities, and healthcare. And I'm starting to see energy and finance move their way to the top. ETF top 30s, you can see that the grains have now moved to the top of the list, replacing home construction for the first time in a long while. Mortgage REITs, biotech, telecom, biotech, financials preferred. That's probably a good way to play the strength that's emerging from financials and to receive a dividend play, but a lot of real estate and dividend leaders as well. So that's a cautious risk-on trade, I would suppose you'd call it. Inside the Dow 30, based on relative strength, using our blended monthly look-back of 3 and 6 months. It's the old reliables, Home Depot, Merck, Walmart, Chevron, Cisco. Laggards, still Hewlett-Packard, Caterpillar, Alcoa, Intel, and McDonald's. I still think McDonald's has to be considered. You got to look at that as a value play at some point. And this is really a divergence between the strength in technology and the absolute weakness in Hewlett-Packard. Pardon me, some allergies. Looking at the regression line crossover in the river for 4 major asset classes, U.S. large caps have come back to drink out of the river. The 10 period has pulled back into the river. The 30 has started to roll over. Small caps done the same, only you can see they were even further lagging behind SPY. Treasuries made their nice bounce. If you played the regression line crossover here on a crossover outside of the river, you got a really nice move in Treasuries. Has gone through the Bollinger Band mean, and the 30 period is rolling over and pointing up, and that would be a confirmation of Treasuries if it can get into the river and then up to the mean, and that would signal great strength ahead in the Treasuries, and that would be in conjunction with, I think, weakness in the equities. But were that to happen, then that would have been a rejection of the resistance at 143, and then more sideways markets into the election is what I think. Gold has come out of this little descending triangle here, and now we've had a trending behavior with both the 30 and the 10 period regression line out of the river, and the width of the Bollinger Band expanding. That is very favorable for gold going forward. We'll move ahead now to the daily report. Here we go. Inside the gap stat for the last 30 days, let's see, the gap down has happened 14 times in the last 30 days. 11 of those 14 times, the gap down has reversed to close higher with an average follow-through of 0.31. So that's like 3/4 of the time the gap down reverses. So that's good news for the morning hook players. And then by the same token, the gap up has reversed 11 times out of 16, so 2-to-1. So playing a reversal of the gap has been and continues to be the attractive play going forward. No signals in channeling or overreaction. You can see the pivot point stats. Volatility has quieted out here to about 0.75% and is finding a level here, so I'm expecting volatility to come back in. And then a move from, the last time we saw a move like that was from about 1.0 all the way up to about 1.6. So the equivalent move now would be a return of volatility to about 1.3. which would bring it back into around the average. So that would be an alert to the VIX traders that with this nice run up to 143 that is stalling, it would not surprise me to see a volatility increase followed by some testing of the downside support maybe all the way back to the 200-day moving average. That's the scenario I foresee. A lot of channeling and overreaction signals, some 551Ws, and then a ton of auto-framed candidates, all of which meet the 2-to-1 reward to risk criteria for mechanical trading. Looking at the Dow 30 Tactical, you can see those signals, just a handful of dojis. The max pain range compression candidates, Hewlett Packard, Coke, Caterpillar, Intel, and Boeing. I think Intel looks like an interesting play. You've got a very high fraud quality number on it, a relatively low price. It was a % winner on Friday, and yet it's still number 4 on the max pain range compression. I think you have to be very interested in Intel right here, especially given the strength in technology. That looks like a natural play. I'll be interested in Alcoa. It was up 1.4% on Friday, and is also fairly high on it was number 6 on the max pain range compression. Looking at the ETF 30s, enormous number of auto-framed candidates here. Coal, Brazil, Latin America, emerging markets, all those look really attractive. Coal especially, with a 5-to-1 reward to risk on mechanical framing. And you can see just how sold off it has been. It's exceptionally big as a % loser, and also formed a doji on Friday. So that's an interesting commodity play in the energy sector. You've got some good 551W plays here in energy, the Dow, and Asia less Japan. I mean, Asia less Japan, I think you got to really be interested in that one. I mean, it's one of the top holdings in the blended monthly rebalancing. It gives you a 551 pattern to enter, and it has a 2.4 to 1 reward to risk ratio. So I think on both an intermediate term and a short term basis, you got to be very interested in EPP. Gold and silver were the big winners on Friday. The silver at 30.80, and was up 4.5% on Friday. The stealth trade is not very stealthy anymore, as both of them are responding to the Fed's promise to intervene. You can see the upward trending channel here from the regression line has rolled over into flatness, and the regression line slope is decaying. It's now below its 10-period moving average, and it occurred at almost 1 standard deviation above the norm, so that would be a natural place for it to have a pullback. You can see the % stretch relative to the 200 is back to the 180-day average. So this is a rejection of the support level, or the resistance level at 143. And again, this is Fisher cut bait time. Very light volume these last 2 days because of the holiday weekend. So I expect to see some action when we get back. Looking at the z-scores of the regression line slopes, again they get up to the +1 z-score, 1 standard deviation above their historical norms, and they can't sustain that. Now they're both the 10 and the 30 have rolled back. The good news is that the underlying 90-day trend is still pointing up and with some room to go. So that's why, in my view, there's still hope for it to get above 143, because you got this underlying strength of trend that's still favorable. And then the 10 hooked up after coming back to the mean with Friday's, at least the fact that it closed about flat. So this is why it's Fisher cut bait time. You've got the strength from the 90, and the 10 is pulled back and is ready to go. And now we're going to see whether or not it can push through 143. You can see how it's been riding the upper Bollinger Band here in price, but now it's had to pause to refresh, and now it's time to go. The width of the channel is still narrow, so volatility is still relatively quiet. Fraud quality numbers for your reference. Bank of America, Intel, American Express, and Microsoft, all very high fraud qualities. Intel especially interesting to me. It's only got an 11-cent standard deviation, and with a range stat of 50 cents. And it's been froggy on a weekly basis too, so I think this is a natural place to be interested in Intel. Fail stat just for your reference. And the signal to noise ratio, Coca-Cola and the VIX, both of those of interest to me. Meaning they are intraday directional, that they have large real bodies compared to the tails. Holding X-day reports, looking at 5-day, all the Z-scores are negative, so that reflects the generally sideways markets that we've been experiencing. On a 10-day, they're all negative as well. And so we have room here for a market that can swing in either direction and make a powerful move past 143 on the upside and as far down as 135 on the short side. A return to quality in the Dow. The commodities have all had a generally strong week here in 10 days. And all the internationals have been decaying along with the U.S. as well. I think the EPP makes a very interesting case now that it's at the bottom of that cycle and ready to go. And that's everything I want to cover on the daily. Keep your powder dry, and we'll see you in the chat room. I tell you what, let's take a look at, we got some time here. Let's take a look at Intel. Yeah, I think there's a lot of reason to love Intel right here. When you take a look at that pullback from 27 all the way down to 24 and a quarter, nice bottoming tail here, and one powerful vote up on Friday. And then even if you just play a breakout at 25 with a 75-cent stop, you have an easy 2-to-1 or 3-to-1 just to get back up to 27. Even a 2-to-1 if you just want to play a retest here to 26. So I think you got to love Intel at that point. Let's take a look at EPP. Even better. Very powerful, stealthy move in the globals. You had the 50 cross over the 200 to confirm a bull. Slight pullback, a nice one-day pop. And now a test up to 44.5, and if it gets above there, they're off and running, and it's the growth on story, the risk on trade in Asia less Japan. I think that also reflects on the strength in Australia. So we'll take a look at Australia. Yep, Australia is even better. The cross came earlier. The slope is steeper. The doji was smaller. And Australia is looking pretty nice here. So I'd be playing the breakout above 23.60. So that's the news from Tortoise Capital. Keep your powder dry and your risk measured.